journey there. Good morning and hello. I appreciate you being here. 8:43 here, that's 17 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Which means time to check in and see what's going on Wall Street this morning. Actually, it was a surprise yesterday. We had a pretty darn good day, even off of some not such hot economic news, and we're going to kind of confirm that this morning with another tidbit out of the federal government. Let's check in with Philip Statler from Statler Financial Services to get his take on the situation. Philip, I gather you were kind of surprised by the fact that we had a good day yesterday as well, weren't you?
I was, Dave, because there was mention early on that, well, even though the night before, supposedly the Strait of Hormuz, they reached a ceasefire, they're supposed to open everything up. Then you heard, well, no, they've closed it back down. And, it was just a lot of geopolitical stuff back and forth. And so I really expected that yesterday would be a pretty volatile day to the downside, but we ended up in decent positive territory.
Absolutely. Yeah. I mean, if there's one thing that investors hate, it's uncertainty, and that's the poster child going on internationally right now. But at the end of the day, yesterday, Dow was up by 276 points. The S&P 500 was up by over 0.5% too, up 42. NASDAQ was up by 187. That was 0.8%. And the Russell joined in the party. The small stocks were up by 0.6%. And that wasn't with a lot of good news on oil, except for the fact that it managed to stay under $100 a barrel, which I guess is still kind of a psychological barrier because it seems every time it's popped over 100, the equity markets just go south in a hurry. I mean, 50 cents can make a major difference on an index, can't it?
It can, and so it's oil drives a lot of things, right? Because it adds to the cost. And the economic engine. So it being below 100, now obviously we'd like it, you and I'd like it back down to that 60, 70, barrel range would be nice to see here shortly, and maybe we'll get there.
Well, I don't even have a snarky response to that level of optimism. Yesterday's inflation report of the PCE numbers was not good, but it could have been a lot worse. But it did give us a picture that we're a long way away from that 2% target the Federal Reserve has. We get it this morning with the Consumer Price Index, and that's kind of the standard report from the government, even though the Federal Reserve doesn't love it. Once you get to the core stuff that doesn't go up and down wildly, it didn't look all that bad. But my gosh, on the top of the hour news, are we going to be hearing about this all day today? 3.3% annualized inflation and a 0.9% bump up, almost a full percent in 1 month. Boy, until we factor out the variable stuff, that sounds like Armageddon, doesn't it?
It does. I mean, that's a huge increase. And we know that a lot of that is energy, right? Oil driving that as a whole, because that's what, the Consumer Price Index takes all that pricing into consideration. And, well, we know what gas prices have done over this last month or so.
Absolutely. That 0.9%, if you annualize it on a constant basis, I mean, you're looking at 11% inflation. Thank God it hasn't been like that across the entire year, and we only go up to 3.3%. Once you take all the variable stuff like energy and food out of it, the core number was a little bit better than they expected, but still no great shakes. We look at 0.2% increase last month. Okay. And a 2.6% annualized rate. They expected worse, but that's still up from last month, isn't it?
It is. It was up year over year, was up 2.5% in the prior month. So now we're up 2.6. And no matter what, even if you look at the core, we're still nowhere close to that 2% number that everybody wants us to get to.
And we aren't making progress in that direction either, because every time we make a step in the right direction, we back up the next month. 2.6% core inflation rate annualized. I should make note at the very least the things being at least modestly under control, and I just say modestly. The fear and greed index I watch for the amateur investor, it's finally, for the first time in eons now, it feels like, out of extreme greed, extreme fear, and just into the fear mode. But, the investment markets are still nervous. Nobody likes uncertainty in the world, and when you take economic issues like inflation being not tameable at the moment and international events, it just gets no fun to try to plan an investment strategy, does it?
Yeah, it is. It's tough right now with all the volatility, and that's why you need to have a plan in place, right? That plan takes into consideration you're going to have periods like this where you have high volatility, and that's why it's important that you diversify first with risk versus safety. That's really should be everybody's first diversification before they really start cutting the pie of the risk portfolio into pieces. And so that's really helps when we get in positions like this.
Absolutely. And that balance of risk versus safety gets more important the closer one gets to retirement age, too, I'd wager, right?
Absolutely does. That's one of the issues we see is that people don't change their investment philosophy when they head into retirement. They keep doing what they were doing when they were working. And that's a big mistake people make.
Absolutely. Just tidbits that I got out this morning, kind of relating to that conversation. Two indications on opposite ends of the generational ladder. First of all, one of the concerns that some analyst was throwing out in one of my tip sheets this morning said that one of the major drivers of stock market growth is starting to go away as folks in my generation, the baby boomers, begin liquidating our IRA investments in terms of putting them into savings to be able to stabilize their income during retirement. A lot of the upward mobility in the stock market from the big IRAs that had been in equities, but now as we begin stabilizing them into bonds and more stable investments, long term, they're saying that some of the engine behind all those index growth items may very well be tapering off as we all age and get into the point where we're drawing down our IRAs instead of trying to bring them up. I found that kind of an interesting thought, but it does make sense, doesn't it?
Well, it does, with the required minimum distributions, granted, even though they got pushed out a little bit with the last two Secure Act bills, we still have the issue that at 73, people have to start taking money out of their IRAs whether they want to or not. And so that starts to reduce those portfolios. Now, a lot of people that don't need it, they take it, reinvest it back in after they pay the tax on it. But still, the tax is gone, right? We've had to pay that to the government, and so after tax, a lot of people will reinvest it, but still, it's taking some money out of the market in that process.
Absolutely, and because you're looking at people in the older age categories, if they do reinvest it, they're reinvesting it in considerably more stable instruments than equity markets, which nobody wants to take a distribution when your market's going down anyway. And sometimes when you have to, I'm not going to take a chance on that. Going to stick that into a 5% money market or something like that, right?
Well, yeah, and let's face it, as that generation dies off and passes the asset down to the next generation is not as cost conscious, let's say. And so, there is the app that, what you pass on may be gone relatively quickly. Even if it's in an IRA, people have to get rid of it within 10 years. And a lot of times when they do that, they're not putting it into a new investment. They're spending it on lifestyle.
So midterm and long term, we've got some other clouds on the horizon as well. Other tidbits you got out there this morning before we summarize and go forward?
So I'll tell you, the one I have that kind of caught my attention is Taiwan Semiconductor. They came out and gave kind of an update on their revenue. Their revenue year over year right now is up 35%.
Wow.
Yeah, so that's really helping them out this morning. They're trading up about 2.33%. In Taiwanese dollars, that's $1.13 trillion in revenue. In U.S. dollars, that equates to about 35.5 billion. Still nothing to sneeze at.
Absolutely not. We'll take that happily. On the other side of the chip fence down the line, one of the announcements out of Amazon kind of flew under the radar. They're contemplating the notion of selling AI chips on Amazon. Since they developed one, what the heck? They might even sell it on Amazon. So go ahead and buy an artificial intelligence chip yourself, okay? Together with that new AI engine we were talking about yesterday. That's a scary thought. Re-summarizing, yesterday was a nice up day for the major indexes with the overnight events and everything going on and the inflation readings we got. What are we looking at 45 minutes before the markets open this morning?
Dave, we are we're in the green just slightly as we kind of ebb and flow this morning. Right now, the Dow Jones Industrial 30 is up $26, which is not a huge deal. S&P 500 is up almost 0.2% at $12, and the Nasdaq 100 is up 1/3% at $76. Russell 2000 is up about 1/4%. On the other side, we've got red ink really kind of across the board. Silver down 0.8%, gold down a little over 0.5%, crude oil down a little over 0.1%, $97.75 a barrel right now, Dave.
Never ever thought I'd be cheering just to see oil under 100, and it's happening way too often lately. Overseas markets, the Asian Rim generally happy at the close at 6 a.m. Mainland Chinese indexes, one of them was up by 2 full percent. The other one is up by about 0.5%. The rest of the indexes kind of followed suit. Over in Europe, they've got a little optimism as well. Talking is always good in the European community, and we're talking to Iran. So the average European index is up by about 0.75% halfway through the European trading day. Getting my beat on my retirement, we were kind of referring to that a few minutes ago, the notion of that balance between risk and security. How do I find you to be able to find that balance, Philip?
Devin, give us a call at 863-382-0037. Love to spend 30 minutes on the phone to make sure that folks are heading in the right direction for the retirement they've always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And newstalk730am.com, where we'll stream it as well. Have a marvelous weekend, sir, and we'll see you next week, all right?
All right, buddy. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, gentlemen, thank you for joining us today. Hope you have a great weekend. Check out the Soda Festival. See you on Tuesday. Bye now.